Welcome, everybody. How are you doing? Glad to be with you. To be with you is nice. We are now live. We're talking to you on a great day for this. Yep, that's right. Great day for silver. Happy silver stacking day to you all. Well done for being investors in silver. Well done for being smart. Well done being followers of this channel. In fact, that has secured you a great opportunity to build wealth in reset times. And that's what we're all about. Not only building that wealth, but also securing that wealth against the extractors, the scavengers that will come for you as part of their Bolshevik communist agenda to bring everybody down to the lowest common denominator of a welfare state of UBI. It is neither universal, because it will be, no doubt, means tested. And it is certainly not worldwide, so it can't be universal, which is not only this world, but all other worlds. It's not going to be basic. It's going to be in their new monkey money. Let's deal with UBI a little bit before we talk about the amazing silver. Yes, the amazing silver. We will be getting to that, and that is going to be immense fun. I'm looking forward to it immensely. And then, of course, we need to also talk about why is it not basic, the UBI? Because it is not going to cover costs for very long. It will start out covering costs, but then you will find yourself in a situation where, in fact, you're in monkey money and it keeps requiring more. And just to retain your living standard, you're going to have compliance and social scores that will then determine how good a citizen you are. Boy, oh boy, you don't want to be in that realm, friends. You don't want to be in that realm at all. So we're now live on the silver bullet train, and we're going to be talking to you about a couple of things. We're also going to be going to the dollar index to show why cutting in actual fact. So listen to this. This is kind of important while you're live streaming. And by the way, I am watching. Hear your comments, engage and ask, what do you think? Cutting on this particular question, cutting rates, when you've averaged 4% since 2020, you have been averaging 4% since 2020, you cut rates and you start not QE liquidity provision. All of these things are happening at this very moment, and you're doing that in an environment where even your current inflation rate is in and around 3%. Yes, that as well, even at this now moment. And you've got a runaway market in terms of silver and gold. And you're proliferating more money. What do you think that's going to be doing for inflation? So we're going to be giving you our three predictions that are certainly in play. And our three predictions are going to go along the lines of the following. 6 by 6 by 6. Oh dear, what has he done there? For the biblical of you, you will know that it is not good news. 6 by 6 by 6, 6 major nations, Western, first world nations, long-term debt. It might even stretch to the 10 years, but 20-year and 30-year will be trading up to and potentially through in 2026. In our 6 by 6 by 6, you will have the likes of United Kingdom, Japan, yes, I said Japan, that nation of low interest rates. You're going to have them. United States of America, my American friends, you are in the club. Yes, you are in the club. Your 10-year is going up on rates as your friend Fed Chair Powell cut them. Well, we've been a little bit off today, but we are trading generally and broadly up at the moment. You're going to have Australia. Where's my Aussies in the house? You skipped rather easily through the great financial crisis as China created heat in the economy until 2016 and the Shanghai Accord. So you think property only ever goes up 6%. That's right. And I'll even go as far as saying the 10-year on the long end, which is medium long. It's not the extreme long. It's not 20, 30, and 40. I suspect will be running 5.75 and potentially heading for 6 during the process of next year. That doesn't mean every single one of these will have crossed 6% during 2026. It will be well on the way to making that everyone will accept it as a fait accompli. coming. That's what we see is happening. And United Kingdom and other European natures such as France. So we'll give you a smorgasbord. So prediction number one, before we talk to silver, why is this important for silver? This is the silver bullet train. We're absolutely all about that. But why is it important for silver? Because the debasement of the debt, that means the downside devaluation acceleration in the Ernest Hemingway's bankruptcy curve, slowly at first and suddenly very fast. You are in the convexity phase of suddenly very fast. That debt debasement, that fiat debasement that goes with it, we'll talk about the dollar and its critical level right now, because it is critical. It's in a very seminal place, even on the Dixie, which is measured against basket cases like Japan, Europe, and a couple of others, Swedish krona and Swiss franc, that are not so bad, is at a very seminal level. The fiat and debt debasement that will occur is going to accelerate the likes of gold and super accelerate the likes of silver, which has also got a production shortfall and a squeeze now taking place. With news that JP Morgan has flipped their position, is quite happy to let the silver market go up to benefit to the high side. This is very, very interesting, and we're looking forward to seeing more about that. So I'm watching your comments on as they come up here. Thank you for checking in with us. By the way, if you're the 100,000 subscriber, you are going to get a prize. You're going to get a prize. That's right, a week in Lagos holiday. And if you subscribe after 100,000, you're getting 2 weeks. So you better hurry up and hit the subscribe button in time, because if you're the 100,000th or afterwards, you're going to be spending a long, long time, courtesy of us, in a lovely, lovely African nation where you can have a holiday, for example. So don't forget, do it now while stocks last, while stocks below 100,000 last. Do you have any books for sale written by you or your biography? We'll come back to that. Got work to do in that space, actually. Ironic, a lot of people are talking to me on that. Thank you for the question. We'll talk more. But let's finish on the live stream here about the key aspects that we're discussing. So we're talking about the dollar. We're going to be talking about silver. We're going to be talking when the silver might have a mini pause. A mini pause. This is a runaway train, but it could have pauses. Where will those pauses potentially be? Utilizing the gold-silver ratio. So we'll check in on the gold-silver ratio as part of the stream with you today. By liking and sharing and smashing it out on your socials, you do us a massive favor. I tend to follow people on X that have shared our live streams. I appreciate people supporting us. They're saying thank you. It's how you say thank you. It doesn't have to cost you that much. And it fools the algorithm. And we're looking for that 100,000. We want to give the holidays away, so people should be exploring the world. That's right. Anyway, so we're going to be talking about that gold-silver ratio, why it tells me why we might get, when we might get a little bit of a rally. Until then, I think we continue to rip for a bit, but we are getting closer to that point. Congratulations, by the way, if you have been an investor and even a trader and on near all-time highs. We will also talk about why people are trying to distract you out of silver with talk of oil and other opportunities. When do you roll into? Many people in the comments, we read your comments. I don't have the time to do detailed replies. Sometimes we reply shortly, but it tells us what we need to talk about next time. And we appreciate your comments, and I read every one that's out there. So other people are saying, Rick Rule says oil and gas is the most hated. Some people were saying that on X, and as a result, you should be investing in there. Our response to that. Then you also get Katuso's research that says you're in an all-time high for oil in silver ounces. You're going to come back down in range. Oil's going to run, silver will slow down, one or two or either of a combination of others. And how our view differs and why it's wrong. And we say an all-new extended relative valuation between silver ounces, these guys, and oil barrels. That's right. Why? Why do we say that? Why do we say that? How's it different this time? Isn't that a dangerous thing to be saying? So let's get started straight away. We've got quite a bit to catch up with you right the way through, and we appreciate the shares. Check out X, the Market Sniper. You can retweet the link for the live stream. So what's happening on silver? I'm going to go to share screen now to ensure I take you with me. I just need to move some account details out the way. We actually trade, so I have to pop over to other accounts so that not so much of a personal nature gets shared. This is gold, silver on Oanda. Here comes the share screen. And let's have a look at this chart itself. Silver chart. Yep, sir. 3 bags full. There she goes. There she goes. So amazing continuation. Nice little HVF squeeze. I wasn't perfect on this one. It took me a while to realize it. I'd stacked a number of orders at 58. Then I got nervous, but a beautiful little squeeze on a lower time frame. Great move up. Great move up. So you might be thinking, I can't buy that right now. Well, at an investment level, you can and you should. At a dollar cost averaging level, you certainly can and should. That's not advice. That's just me talking to myself. And I continue to. But what about those that are trading with a tiny bit of leverage? Well, there's a cautionary that comes in on that. And here's a key chart you need to watch. It's called the gold silver ratio, and you know of it. So let's pivot to that. We mentioned we'll be covering that. XAUXAG. And it's quite important what we're saying in here. Let's go also to a much higher time frame. So we'll go to the monthly. I've got important things to show you on the monthly. That's 4 weeker. Let's remove that. So what you'll probably notice, and here was a thing. So some people like to remind us of anything we've said that's incorrect. The one thing we said, and we said it in the following way, and it's quite important to listen how we say it. It's potentially people, if we were to get a demand destroying event, lots of possibilities for a demand destroying event back here, we could face a potential escalation first in the gold silver ratio that could go even higher than the previous high. This was something we said that doesn't look like it's going to happen now because the capitulation in silver supplies has jumped in front of the collapse of the economy, but we started to get a move out of our famous pink box. Yes, the pink box. We are now in a disorderly decline. We like a pair of Ds, we do. Double Ds, we're on the disorderly decline out of the pink box, and we've got a pair of double Ds to play with. That's absolutely amazing. I get excited. The testosterone morning it is for us. It's all very good. Spikementals, erectile projectiles, all of them are showing up on the scene of this crime. That's right. Innuendo bingo morning it is, or afternoon, depending wherever you are. We are heading down. Now, here's the thing. When I show you this, we have clearly broken the pink box. Its virginity has surrendered itself in the most disorderly fashion, the little hussy, I say, and we are heading down, and we are heading towards the 65 mark. Now, previously we'd spoken of a left shoulder into the Shanghai Accord of 2016. That was when China was now indebted, and it was clear there was a property problem in there. That was a form of left shoulder. We had the extreme and clearly managed event that was the CV19 event that distracted many people from the fact that that was a huge bank bailout. A huge bank bailout, friends. That's right, 23 trillion. Not only US banks, but it went to European banks as well, including Barclays, Credit Suisse, and UBS, and Deutsche Bank, as well as Bank of America, JP Morgan, a couple others. That's right, they dipped into the loan pool. They must be kept alive. Loans, they say, loans. I doubt they're paying back much on those loans, but they're getting plenty opportunity. Here was the shoulder, and this is the relenting sell-off that jumped in. So first we did the silver gold crisis, the moving up where silver was being suppressed eventually relented, and that was key to our triggering event. And you're seeing a real mass spill here heading for 65. So over here, you actually hit 64. You just ran the 65 level. You can see how long this has been in place. We've been above 65 technically on a candle body level since 2014. You've been 11 years, friends, above the 65 gold silver ratio. And you have this structure. Now, this is typically a bit big for a right shoulder. We were starting to say, you know, the potential of that head and shoulders being a bit spoiled by duration. This is quite a small left shoulder, but you can see we were more grinding up here. We've been far more volatile recently. So when you have huge hit downs and then sharp rallies, and then you got this holding period that went on in our pink box, well, you were held up for a while before you got your way with your lady. Now she's spreading wide and going for 65. And that is a spiller. It's an absolute thriller. And no wonder you're thrilled. It's all the way from Manila. So you got your Filipino lady. It's getting interesting. It's getting dark. But we have a low here at about 62. And our suspicion is you will have a potential pause, maybe. Remember, listen to this. We said it's an underpriced event, that if you had a demand destroying event, you could go higher here. That doesn't mean we're saying it absolutely has to happen, that it's the highest probability, it's a 55, 60, 70%. We just said no one was pricing for that. The demand destroying event that was going with AI, technology valuations, all of that, it looks now, prediction number 2, that it's going to be 2026, not 2025. So it's not stopping the silver train going first. We don't know the order of these events until the markets show us. When we broke out of this pink box over here, there was a possibility that we had to warn about. Once you've warned of a possibility and it comes back in and it's over, that threat kind of got parked and moved further down the rank of taxis. We're doing the silver run. The silver run is going, it's not being held back. So the 65 run is likely to be overshot. This low was 62. So you had 64 here, you had 62 here. I'm expecting that we're going to run that post-COVID collapse low. Now, you know that you had a bit of a run on silver during then. Gold went a bit higher, and you're going to probably just run that low. So you're at 66.9 at the moment, 67. You see the valuations. That means you need 67 ounces. This is 10. So you need 6.7 of these to get a single ounce of gold. We expect that to go to the 62, maybe just run it before you might get a bit of a rally. So that means generally still some more upside in a double D, a disorderly decline. We like a pair of Ds. And I expect that to go continue in that direction. What you might then get is further off move until the 32 level. The 32. Why the 32 level? Where you might get another rally of forms. At this point, I think you will be through triple digits, by the way, on silver. So that'll be looking very good. I refer you to, and I will go back to the silver chart and show you why 91 stroke a possible technical run of 100, our second interim. You move fast. The horse gallops fast in between the fences. First interim done. We're now at the second interim. We'll come back to the silver chart setup, but I'm just trying to give you a model for where you might rest. It may not be the time to wail in at the highs on leverage with tight stops. You could get a bit of a runaway, but you could get taken out on a pullback down. People need to think about that. Method, HVF method ensures you buy when there is low volatility, you can have tight stops, and you get an asymmetric benefit. So we are still sitting with leverage long trades from well down, 49s, 50s, etc., that have been open all this time and are just getting bigger and bigger. The P&L's all-time highs across the board, all accounts. Why? Because we stayed focused on silver. It's the single biggest event. We're not looking at oil stocks. We're not looking at Rick Rule said the biggest one, XOM, what's it called again? The biggest oil stock. Gone out of my name. I'm not running into those. The miners are not even getting respect for the silver prices. People are in disbelief still. It's a wall of worry. They are denying the wall of worry. They don't see the scale of fiat and debt debasement and that this is the primary reset. Therefore, they don't know the size of the move that they could be participating, and they're already looking to marry another woman. They married Giselle, and they're already looking over the fence at other girls. What a shame. What a shame. Anyway, there you go. 32, 446. And why that? Because it comes from the measured target that comes out of the head and shoulder. That's where it comes from. And at that point, you might get another rally. By the way, you would then have a left shoulder, an even bigger head. This would all be the head. If we continued down and had a rally, you would potentially get a right shoulder there. I don't think it goes that high, by the way. And that break will take you to single digits. Single digits. We have called for single digits in the gold-silver ratio. Always. Always have and always will. The only way this plays out for us. And you could overshoot the current mining rate, which is at about 6.9 ounces of silver, coming down from 9s, 8s, 7s, because there aren't enough dedicated silver miners. A large part of the production, I don't want to say most, a large part of the production is as a secondary product from miners of other things. In other words, it's not valuable enough at the moment to dig a hole on its own accord. It's only as a secondary product where they're looking for something else that they can get out sufficiently that silver is even being pulled out. There's not enough pure silver plays. Mines take 15 to 20 years to get properly going in many instances. You don't fix the supply deficit that the financialization of everything that took place from the 60s right the way through the fiat system, everything that suppressed silver and gold, that did fall. We don't want another Hunt brothers, not a relative, I can tell you, ever to happen again, the financial suppression that they have put on. I'm actually surprised we haven't had huge leverage increases for our positions. Some of you might have. Anyway, so that is what I think could happen on gold, silver. So maybe a bounce at the 62, possibly run through it. Maybe you get a 59, even 60, and you get a bounce there. That has shown to be a significant level many, many times. Let's just finish off showing you why. You had a bear flag here. You had a bear flag right there. You've had rejection on the way up here and here, with each time a pullback getting smaller. You had support in 2016. That's 2021, the bull high. So, you know, this has shown itself to be a very key level. 32 will be the next one. What a ripper. You're at a different level. You're going to be a lot happier then. In between these ranges, you fall hard and consistently. Let's go back to that silver chart. Don't forget, we'll also be covering the Dixie for you in all of this. Let's have a look at your comments. Thank you for your engagement. So, will silver go past $100 soon, said David Mount. Well, I can't tell you anything for absolute when we're talking about the future. But what I can say to you is that, as an anecdote, in the meantime, a lot of calls have been taken out. The volume of calls on silver for February delivery for silver. I don't know which day. Someone can check the futures contracts and say for which day in the comments if they like. That would be kind of helpful. Someone a lot of strikes at $80 and $85 have been bought. In other words, people have been buying while silver was in the 50s. Quite near-term calls for delivery. You have very limited time. If you're buying that in November and December through to February, you might be only mid-February that the contracts are up, not necessarily the end of the month. I'm not sure on that date. Someone will confirm in the chat below. But you don't have a lot of time, and you're buying $30, $35 out of the money calls. That means you only really start making money. They'll be very cheap, by the way, because they were far out the money. But now the volatility is climbing. They're getting more expensive. What you'll find is they're also moving very strongly towards the strikes from when they were possibly initially opened. That starts to increase the delta. They start to climb in value a lot higher. That leads to probably insider knowledge. I point to 9/11 and the shorting. I think it was 60x, the number of puts. People can tell me, again, it's not the number that's important, but an outlier number of volume of airline puts just before 9/11. People, when you see increased activity, it's often insiders profiting for themselves. It's often insiders profiting for themselves. Increased activity and increased volume often can be informed people. They are spending real money. Real money is being spent. And that typically points to what we are saying here, the potential likelihood for real knowledge or insider or speculators. They could be out and out speculators that don't have the knowledge, but certainly have the view that something big could be coming. And that typically is quite a tell. So we're going to draw that HVF method for you, and we're going to remind you that in actual fact, the pause area that we are anticipating is $91, the second interim. That's right. So let's try get that chart back. I've had to do this twice because it's not loading my indicator. Get the indicator in and show you the journey path again. And this is a slight difference. We've always got to just exclude that one price point, which we all now know pretty well off by heart. 49, this was the high, the secondary high, 49.81428. And we take it out as a minor imperfection. So this is your upside HVF. The point we make is that silver gallops fast, any HVF breakout gallops quickly in between the key targets. We absolutely ripped our first interim, by the way. We've ripped our first interim and we are trotting. It's getting more explosive, and we have a $91 there, 90 and a half. You could see, given how close 100 is, I'm going to put $100 in there. That's going to, unfortunately, or fortunately enough, shake a lot of people out that are going to take profits. They're going to say, you can't trade silver at triple digits. That is ridiculous. The silver to the oil ratio has gone way too high. You know, all of these kind of comments are going to come out. There's your 100 in blue dashed line. I'm making it a show there. You could, in running the 90.58, get a touch through that triple digits. At that point, there might be extended rejection for a while. So the chart could have some aspects of this. Let's show you it and draw it nicely. You could get quite a bit of rejection at this point. Now, I'm not sure you're going to mind that. So you've run 100, you might do 105, you might do 101, you might not run 100, you might just run the 91 and go to 93 and then pull back. So there'll be a winding up phase. And then, my friends, the next open field is the largest of them all, and we're calling a 333 target, at which point I'll reduce by 50% my open holdings. This is not the top. Please don't say in the comments you're calling the high at 333. This is the first macro HVF of epic scale, and that means it qualifies for absolute overperformance to the other side. And HVF method has a way we deal with overperformance to still get further upside in even leverage trades. Remember, we're trying to make you wealthy because this is a polarizing event. We'll come to the dollar soon, but the cost of living is going to go through the roof, especially for my American friends, but generally for my Western friends as well. You won't be far behind. And we'll explain that more when we get there. So you need to build wealth just to ensure that your generation, your kids, and everyone else has a foundation for not being part of the UBI crowd. It is an income. It's a welfare subsidy. It is an I. Income is when you get paid for doing something of value add for someone else where there is some form of contractual agreement. Being born and existing is not a contract. It is not work. You might even be a burden on society. It doesn't justify income. I'm sorry. That's a biological event involving a sperm and an ovary. It is not an income generating event, although they hold all their citizens as asset value and future tax, etc. They manage you like an actuarial crowd is managed. But never mind, let's park that thought. So back we come to the silver chart. You could be shocked by how much it rips. And we have to also announce that the BIS, let's go to some Twitter feed, BIS, interesting one. We need to talk about them. The central bank to all central banks, by the way. So I think you know that. Let's get that in there and put the device where I can see your comments. BIS and bubble and gold. So the BIS has come out, stock market and gold, bubble. Let's put that in there on X, and you will find that they have come out, and what they've done is gold surge, she's shift to speculative assets from haven, BIS says. So there's a couple of things they're saying. Concerns of double bubble, toil and trouble. They sound like the witches from Macbeth. Double bubble, toil and trouble. What curses are the little satanic wenches putting on us all with their double bubble, toil and trouble narratives? Well, they are to be ignored and blocked because they are also cunningly associating gold to the stock market. Now, let me tell you, by all measures, the stock market is in overvalued territory. But that is because debasing fiat is going so fast and devaluing bonds, the debt, fiat paid to you a little later with a rental agreement attached. It's all fiat. Debt and fiat is fiat. Okay, please understand, it's currency, currency, currency now, currency later, currency with rental agreement. It's all fiat. That is your bubble. They don't mention that. They don't mention that debt and fiat is the bubble. The central bank, to all central bankers that have a parabola of issuance. By the way, 2026, America has 8 trillion. Don't make me tell you how large a trillion is with the seconds count again. You all know it. Thank you, by the way, for the super chats. We'll refer to them. Francis of Assisi or Frank Sinatra. Yes, I'm singing my analysis, and I'm a big animals fan. Thank you for your contribution, Jolly Lollipop. And Jackley on 6502. Thank you as well. Thank you for the service, Francis. Thoughts on real estate to metals ratio with the silver at $300. Can it be charted? I don't have a suitable real estate benchmark unless you can come up with one, Jacqueline, on 6502. If you can give me a chart, I will chart it for you. I used to and did in the United Kingdom, however, from Halifax and Nationwide's housing in the UK. I broke it down to gold ounces. So I did the GBP USD in an Excel spreadsheet. I did XAU USD. I worked out how many the average house prices, and I put gold ounces. And we came to the conclusion that despite how extended housing had gone, I did that in around 08, 09 when we were in the post-boom of the bust. And also once before that, when we were still in the boom phase in terms of asset relative valuations. It's a very good study. I did do all of that, and I got to the opinion that actually in due course, an average home could go back under single digits and could even go to 1 gold ounce. So single digits, and even an extreme case of collapse, to 1 gold ounce. So that is very, very far. The average home in the UK is not necessarily where you'd stay. There's a lot of low value homes up north, etc., etc. It's probably around $250,000, $300,000. It's not likely to be the average person on this channel might be a buyer at a higher level, is all I mean. So averages can hide a lot of cheap stock in it. Back to our witches of BIS and their double bubble, toil and trouble in gold. What they are doing is associating gold's climb with a stock market that is climbing. This is deliberate malintention. This is deliberate malintention, because by all measures, the stock market is a bubble. So you tie a truth to something you actually wish to suppress, like it's a truth too. I tell you lots of truths and then I slip in a lie. The lie is gold. Gold's reaction to the debt issuance and the debasement of fiat is 100% accurate. It is telling you the temperature in the sauna. It's not turning up the heat. It's just telling you truth. If you're sweating and it's getting hot for the BIS inside there, they say the temperature, it's a bubble on temperature stocks. No, it isn't. The temperature is telling you the truth. You're facing the heat, that is the fire in the sauna of fiat and debt debasement. You don't blame the canary that tweets in the mine. You don't blame the temperature and say it's awfully hot in this sauna. You turn to the fire and say, why is it on so hot? of fiat and debt debasement. That is the fire. And this is what they're doing. It's a cunning trick because they've mixed in a truism with gold, equity valuations generally. They've mixed in an equity valuations. I also want to talk to you about the Financial Times, the pink papers, as they're often known, run, of course, by you know who, the legacy banking cartel. Let's put it in more explicitly. Financial Times, it seems FT is not enough. And you'll see that there is an article from them. How far will we have to look? Prices have doubled in less than 2 years as central bank stockpile bullion investment pours into gold. Gold price tops for the first time. That was a while ago. That was October. They have subsequently released articles that have highlighted that gold is likely to be crushed. Here's someone saying 3,750, you're about to get smashed down. Many bear calls that are going to be shown up. Many bear calls that are going to be shown up. This was December the 10th in 2025, and I'm afraid I don't see it. I'm not sure what, it's in dollars, so he's clearly a bit deluded. So we can't find the Financial Times. I saw it a while ago, I didn't mark it, but they are absolutely, again, part and parcel of a trying to talk you out of the precious metals game. Remember, they don't want retail to win, and it's going to be big. It's going to be big. Thank you for the Canadian dollar contribution from John Journey. Would you be able to show us Aris mining stock? We will have a look at your stock when we turn to the stocks. Please remind us, John Journey, my team will do exactly that. Thank you for your super chat. So going back to all of this, we had a lot of interesting things. What else did we have here? The liquidity provision. Now, the not QE. People don't know that you got a cut, but you also getting money provided to the banks in terms of where the repo is and everything else. The silent part of the Federal Reserve meeting of yesterday, December the 10th. Let me just read it out from Grok. Key Federal Reserve announcements on liquidity provision, December 10th, 2025. As part of the FOMC meeting outcomes, the Federal Reserve announced measures to actively manage and bolster liquidity in financial markets. Oh, what does that mean? So between them and the banks, they're already trying to plug some holes. Repo has been hitting hard. Combination of the Cayman Islands being the last buyer of last resort, of course, a UK proxy for treasuries. You know, that pristine collateral. There were people that told you there were a shortage of treasuries. You know who I'm referring to. Shortage of treasuries, guys. Yeah, no, there's not a shortage of treasuries. You got the Cayman Islands doing a 24-hour financing using repo markets facilitated by JP Morgan, Goldman Sachs, and all the usual criminal banking cartel to just provide a bid on treasuries. And you have 8 trillion to roll in 2026, which is going to be far bigger and even bigger than this year. That's right. So they are providing 40 billion, it turns out, beginning in December the 12th. That's starting literally tomorrow, friends. Monthly schedules. And this is not once off. This is ongoing, these purchases. So with QT concluded, there was no meaningful quantitative tightening. Reserves are projected to decline further due to growing non-reserve liabilities. These purchases, estimated at 20 to 25 billion per month ongoing, address near-term pressures like tax season outflows. Well, hang on, it's not tax season for the entire year. How long are you continuing this for? So temporary. It's one of those great lies of tax extractors and proliferators and fiat and debt managers. This is what they do. They talk about temporary. It's the tax season. We'll do that. Tax season outflows till April 2026. My expectation is this will be going on for far longer than you realize. So at this point, you're actually in a form of QE for the banks, not for you, for the banks, plugging their bankrupt holes again that some of them might have had by being short on silver. Some of them might have had by being short on silver. Here's the story, and this is Eric Young. Give him a follow, by the way. is JP Morgan now flipped to hoarding silver. So synopsis, JP Morgan is making a historic silver bet, having been a manipulator against silver and held it disproportionately down for the cartel. Are they now going to really benefit out of all of this and pivot to the long side? The bank now holds 750 million ounces, friends. That's an inordinate sum, by the way, that they've been accumulating. So that'll also be part of the sudden squeeze. Once they realize there's no getting out of this and it's squeeze season, they quickly get the last big batches themselves, stockpile a whole bunch, add to the squeeze, and then benefit from the upside of the suppressed spring over the entire financialization era, where it has lagged inflation extensively for many of those years. And now we get release, and they want a position. Physical supply is tightening in the US. Mint reports coin shortages. COMEX open interest is 244% of registered silver. Lease rates near 30%, and 169 million ounces have now been moved to non-deliverable vaults. So that was stock. That's now, we own this. This belongs to somebody else. You can't have it. That is called sales, actually. And that is very interesting as well. And we thank Eric for bringing us up to that. By the way, the Fed hits control pre. This is your article. 9-3 was the vote, the cut, and of course, Treasury bill purchases. Very interesting. So let's go back to the charts, and we need to talk about some of the others. Somebody did ask before I forget for Aris Mining, so I will do that. Thank you for the super chat, as we say. And we are talking about Mining Corp, I imagine Canada, listed, Toronto Exchange. Nice move now. It hasn't got a long history. 2010 is not bad. I mean, for a crypto, it would be literally an OG, but in terms of mining, it's not a long term, and it's had nothing but pain during the hard years. It finally found a base and a low. Let's have a look at this on a little bit of a shorter time frame. And you'll see, as often with big moves upside, if this was something you had an interest in, it did provide some opportunity potentially for an upside HVF structure coming out of that low. So let's just show you that. Here you go. We've gone to weekly. I just want to say this chart, you can see from the candles, is illustrating typical footprint behavior of a low volume chart. That doesn't mean it's bad. It does mean it's low volume. And that's interesting to bear in mind. By the way, low volume stocks can move very hard in your favor if they suddenly become high volume. This is a first structure in a new low, after a new low. That's your final low. So we're on a weekly time frame. So you would have traded this from the 5s through to the 17s. Because of the massive move we expect and so much more to come from silver, I probably wouldn't have closed any here. It's very early. It's a small time frame pattern that's already been done, for which overperformance can be expected, and you've already done that. So it's kind of after the fact here, this particular draw, and I would still stay in it. I wouldn't be closing it. Other miners that have done well, we always mention our friend Heckler. We grabbed a whole bunch of puts. Look at that now. My first set of calls become in the money calls at $20, and that was a far way away. We are now $19.41. Thank you to the silver market. Thank you to the power of the silver market. It is being generous to me. Beautiful little primer that's squeezed here on an announcement, by the way, when this was $6. And as we've said before, 58 doesn't sound like such a big number when you're at 19, but it is. If I delog this, you'll see it. And as I just said for the previous super chat that posted on Aris Mining, so it is for this. It's not a close at 57.99. And such are the multiples. You're going to have face melts on silver miners, guys. You're going to have face melts on silver miners. We're receiving other super chats. I'm thinking about converting all of my gold to silver for now. I only have 10K gold and 10K in silver. What is your opinion on that? What is your opinion on that? I will answer twice because A, it's a super chat and you've been very generous, and you asked twice. So to make sure you hear it, I will make sure I answer twice. Thank you for the super chat, and that's at NBU4LJ. Quite an interesting name. A bit R2D2 from Star Wars, but thank you very much for your super chat. We appreciate it. So, what do I expect to outperform, silver or gold? That's the question he's asked. Providing this is an investment and not a leveraged trade, and I am on a non-advisory basis telling you what I would do were I you. I would overweight now to the silver side, providing you're not a hyper-emotional person that will struggle with the higher volatility. I'm thinking you can cope with it because you've already accumulated a 50-50 portfolio. So you could indeed trade your gold in for silver ounces. Bear in mind, the storage is significantly higher. The weight is significantly higher. And the cost of storage, if you're using vaults, will be higher. But the performance will more than pay for that. The extra outperformance will more than pay for that. Not that I think gold's going to do badly. I see double digits for gold, etc., etc. I just see silver doing a face melting, disproportionate move that will more than cover for any additional inconvenience and costs. So my answer is, given the numbers you've suggested and the desire to grow your wealth and take you to a higher level, were it me, I would take 100% silver and I would be overweight. Genuinely, I don't quickly tell people to get out of gold for reasons, and I'm not telling you that, but in that set of circumstances that you've described, that is what I would do. I'm hoping that's clear, and that was explained at least twice in a manner that you could comprehend, and for everyone else. In short, it's going to be exceedingly hard. Gold is your new measure of account. It's not a dollar, it's not a euro, it's not a pound. Those are all devaluing. And because they're devaluing versus each other, you're having one being weaker than another, etc., etc. You may or may not notice the fact that that's going on. They're all devaluing. The debt's devaluing. The interest rates are all going up. That tells you the debt's devaluing, which means the currency is devaluing because, as I've explained, debt is fiat with a delayed delivery point and a rental agreement. That's all it is. So that's how you must view things. Okay, I wanted to actually cover the dollar, and I will keep going through the super chats. They keep coming, and we thank you for them. So that was NB. We appreciate it. Let's see if there were any others. There's someone else. Any thoughts on why CDE, my largest holding, is lagging my AG, Heckler, and Pan American by so much in the last weeks? I'm contemplating reallocation or waiting. So CDE had a major acquisition that they took a dilution on, is my best understanding. So I'm not fundamentally staying 100% up to date on all of these. So I have a top line view over. There'll be actually voices that are more active that will possibly even give you a better answer. But I wouldn't, if you've already, I've got the same situation. So I have every single one of those stocks you mentioned, by the way. And I did when they started to underperform. This is how I manage things. My winners I double up on, and my laggard I reduce. So I reduced, but I didn't close. So I cut it in half and distributed that onto my winners. And I also took some shorts because we spoke to you last time about benefiting from a crash. Prediction number 3. So what was 1? 6 by 6 by 6 interest rates. 2. AI and debt-based dramas coming for 2026. The demand-destroying event didn't come to spike the ratio before silver started doing price discovery, as we warned was a possibility, not a personal probability and bias. That didn't happen. Great. We're winning. We're in silver. We're long. It broke the pink box. It showed us what it was going to do. It started. It gave up. It came the other way. Brilliant. We're happy with that. We positioned for maximizing on silver. When we get, or if and when we get a DDE, point number 2, you could in fact see a little bit of fear. Now, a little bit of fear might chase some money into bonds, but actually the switch that is pivoted is that central banks don't see American debt as pristine collateral. Forget that phrase. Every time I see that, I want to urinate in my pants and giggle. I'm going to giggle so hard that it promotes the other. We're getting old, that prostate muscles aren't what they used to. I giggle so hard that I'm likely to make a wet pant. That is what I hear every time, or I almost feel like doing when I hear the phrase pristine collateral, treasuries, we're moving treasuries. And then the British go, gilts, gold and copper bottom. No. It ain't that. That's all a lie. That's all propaganda. They've overdone it so big, so much by so far. Governments aren't good for it. They're worse than junk companies, medium-sized corporations that have been battling. They're in the same category as that. Okay. Pristine collateral is no more. Forget it. It is actually the bubble. You're talking about the excessively positioned bubble. Anyway, back to the question. Should I reallocate? I tend to, just because I don't want to, I adjust my balancing after quite a short period. If I expect something to move and I'm trading leverage and I've got in on the way up on silver, I can go in quite big with quite tight, stop. And if it moves slowly or does anything I don't like, I immediately cut it by half. If it runs in my favor, I'm good. I let it go. That's kind of what I do. So I do an early allocation. Are you doing what I expected you to do? So you could have done that. If you haven't done and you've waited, being patient, you could just get out before it starts to get that revaluation. So you've had a bit of indigestion. It's swallowed something that's taking. The python has swallowed a pig, and it's working its way through the system. You could just be getting out just as it's ready to. So once you've waited a while, it might be worth your while for a bit of catch up, because you might get a catch up soon. We'll look at. So Jim Fry, thank you for your super chats and your contribution. We will look at the CDE chart with you, and I will come back to that. Let's talk about the dollar, and we will talk about this. So the 100 is a psychological level. There we do it with the pink, there she blows. And then there is also over here in the red, basing, ascending, grind line, which is a subset of a trend channel, which captures localized lows, and you are in a wedge squeeze between the $100 mark, which, by the way, sadly for people that are dollar maximalists, we'll have a chat about dollar maximalism in a moment, that it was formed in 71 or 72 at 100, and you are below 100 by a few smidges at the moment. I will keep going back and doing the chats. I recognize that they're coming. So all your super chats will be answered. I've seen how it works here, and I will go through everyone. No one will be left hanging. Thank you to the team to remind me, but we will never leave anyone hanging. It's not in our brand. Anyway, so you are squeezing here. You're at a critical moment, and you are back at the bagel. You've just cut rates in an inflationary time. That points to a signal of dollar devaluation, and you are providing liquidity to banks that are some of the biggest banks in the world and the most bust, that have been leaning on the repo at the moment. So what does that mean? And I regularly say, both on X and on here, people aren't talking about banks enough. We talk about debt and fiat-based collapse. The intermediaries of debt-based fiat are the banking system, and the US hegemony are the worst. But I can tell you Europe is not far behind. Some of them are the stupidest banks in the world, in Deutsche and UBS, the Swiss banks that wolfed up the subprime garbage, etc., and even the British banks in Barclays, etc. Believe me, derivatives, all of those things, they're all a little bit sick. We aren't talking enough about banks, and that is how they can roll on your deposits. Please don't carry excess fiat in your bank accounts, not especially in the Western banking system, which includes New Zealand, Australia, and Canada, all of Europe, all the English language speaking nations, Northern America, and the United Kingdom. Okay, so what's going on here is quite critical. I'm going to drop the time frame. I first wanted to show you where this is. So if we just go to the weekly, you are in a situation where you've made a very hard hit rejection at the 100 and are coming back here. So here you are. You came into a low, you've done that, marginally lower low, and you've done that. You almost need this to reverse. So we might get some news of how stupid Europe is, both in their quest for war with Russia. We need bodies for the meat machine, and we want to also kill some Russo-Slavic bodies and reduce our own population count. Please give us your sons. That's literally the tone, by the way, of some of these warmongering EU types. Thankfully, I don't have sons in the European world, but I would certainly say to all of you in Europe, the United Kingdom, watch out, the warmongers are there. Dollar is at a key point though. This breaks hard and you get a down move. I'm drawing a new box for you to have broken. Will she spread her legs? I don't know. But if this comes through, you might get a return move that'll throw you off. And then we could have dollar-based capitulation, which would mean since subprime 2007-8, this trend channel that has been established could break to the downside, as long as we are getting such bad labor, bad job markets, that the Fed is choosing to fight the economic strength and get the price down for rolling debt instead of dealing with the inflation risk and up. Plus you have, by the way, a new Fed chair that is coming that seems to be hand-selected by Drumpf and his cronies and his handlers, that is going to be more dovish. Plus the person that was added, Moran, I'm tempted to say moron, called for a double cut, 25 basis points, 50 points in total cut. So he is proliferating the Fed, FOMC with doves, which are debt debasement of nature, dollar debasement of nature, and also focused on trying to bring the price of rolling debt down, and that sacrifices the dollar. And that, my friends, is turbo juice for your gold, for your silver, and for your platinum. And by the way, our 6 by 6 by 6 nations at 6%, the debasement that goes with that means not only dollars will be dumped, debt will be dumped for physical assets and precious metals, but Europeans, Australians, New Zealanders, with that debt debasement, will also be moving into capital preservation, which will mean the same things as we've already been highlighting. So the dollar's position in this tightening wedge, if there's a breakdown, it's going to mean you're running to that 62 gold-silver ratio, and silver is heading for the $9,100 run. And that's going to be very good. So we're going to come back to CDE for our guest that gave us a super chat, and we thank him. John Journier, wheat and precious metals will be the new Amazon. God bless your heralding of truth. It is a scary time for many, but people's eyes are being opened. Thank you for your kind message, John, and for your super chat. I will go past wheat, and I'm sure you will enjoy that. And we will discuss its great prospects and its targets as a reminder for you. And it is a moment of truth. It is a great Ponzi lie that is being exposed. I believe we are positioned for truth. The biggest word that has the highest meaning to me is always been, what is the truth? Give it to me as hard and as brutal and as raw as it comes. I'd rather know it. I'd rather know that we're being run by a bunch of abusers that are being blackmailed for fiddling with underage humans called children in normal parlance, than be buying into some phony narrative. And that is my assessment of where we are. So let's do CDE and wheat and precious metals for our super chat friends. So CDE, we'll start there. Core mining, it has underperformed. It has underperformed, but let me tell you what will suddenly get recognition and bring it back into the game with a resound return to form is the ongoing nature of the price. The ongoing nature of the price. If I'm being frank, it's one of the more volatile HVFs, so it wasn't my personal favorite. I didn't go in it on the most. This is our draw. Here's our two impulses that were quite violent and quite close to the lows. But that is not a bad thing. Again, it's going to be outperformance. The target I'm going to give you is, hey, if you want to take a little off here, you can. It might not be a bad idea, but it is going well beyond. So the multiples we are giving you are actually very exciting multiples that are actually going to be transcended. So I don't feel you need to close a great deal if you are in the CDE. And if eventually the scale of pricing means the fact that you have any form of silver miner is going to serve you in a very good stead. This one had a target of 50.96 and you're already at 17. I say already, that's still at 2.5 times that you're going to make, almost 3. It's not quite 3. And I would certainly buy it on any dip. The good news for our super chat requestion person on CDE is that's a good hammer. Even though you came down in the direction of 13, you were bought back up on that candle. So candlesticks analysis. And you had a very similar candle here where it's a doji, which means the open and the close is the same. We're on a month, by the way. So both these months tested downside and rejected them. Helped, no doubt, by the silver price and came right the way back up. So if there's been mergers and there's been an acquisition being digested or anything of that nature, I'm trying to remember, I don't have the specifics. We can even ask Grok just now. They are being rejected and bought back up. So you don't have to rush to sell this guy. You're going to be doing just dandy by owning some silver miners, and it's probably going to catch up on performance. And $51 looks like where it might have some rest. The second and the final target, the second interim and the final target are well on the way and significantly higher from here. And you've just had 2 hammering candles after a bit of a rejection. So the initial reaction to whatever occurred caused a degree of negativity. Silver also went into a continuation pattern for a while, so you had the pullback. I have noticed not just CDE, but even on Heckler, one of my favorites, when we had a 0.4% pullback on silver, we got a 4% pullback on Heckler. So the downside is being disproportionately measured on the mining stocks. They keep getting better by excessive reactions to the downside, only for silver to trade higher. And as yet, they're not all making new highs. When that gets realized, you've got to remember, guys, this is just further compressing the spring because the markets are in disbelief that silver will stay in a sustained level at a very high price. Never mind that it's going to go significantly higher still. The markets are in disbelief and funds are in disbelief because it's too small an industry for their hundreds of billions that they have to pour into such illiquid stocks, relatively liquid stocks by market cap. Remember, they're chasing into NVIDIA. That's a 5 trillion market cap. I don't know if it's 5 trillion today, might be 4.8 or 4 or 5.1. Who knows? But that is by orders of multitude, extremely way more expensive. And the ETF tendency of people buying ETFs that keep chasing the greater market cap has further pushed those out and denied capital of investment into silver. So you actually should view the potential of silver almost like crypto guys look at shitcoins, only there is no shit to be seen. There are small market caps, excessive moves can and will occur. These people waking up to mining and physical aspects are going to absolutely face melt the silver market, and you all will do exceedingly well out of that. So again, we thank you for the generous degree of questions and super chats, and we will be looking at all of them. No one will be left behind. Ko, so that is Ko. I don't know if I'm pronouncing it right. Kur. You tell me how. Do it in sounds like English for Francis. We're also going to go to PAAS, Pan American. Another one. So we did the target for you. Overperformance, just finishing on CDE because I don't like to half do something where, especially on a super chat, you've got to remember that actually that move, that target move doesn't even make a new all-time high. For all that you have data for, you will trade higher. You will trade higher than all-time highs on this. You got to remember, $91, which some people think have a chance of happening before February. means you had a higher silver price than you've ever had. Now, I don't care how much damage the management managed to do and dilution of ounces to shares over here, but by the time you go $333 up top here, you will have blown this number out. So please don't be disappointed with your prospects. Never mind the 58. How about 458 and making new highs and potentially going to $1,000 if we go single digit, thousands of dollars in top. They will have diluted and gone back. So you are sitting, you've married the beauty queen. Truly, guys, the journey's just begun. And on that side, I'm an optimist. There's so much of our method is like my shirt, you know, a bit doomer, black. It's funeral gear. No. Not when you're in the silver space. There is no greater HVF that I have ever traded in my, and I'm closer to 60 than 50, terrible admission to make, that I've ever traded. There has been no bigger. My entire life of developing what I've done and coming has now presented me at this time the single biggest trading opportunity I've ever traded. That has a high one of 1980. And the entire up leg of that was my childhood to 1980. I mean, it's immense. So you do not understand how well positioned you are by watching this channel and by having the views you have. So for those of you that think I haven't maxed out yet, I should have made more. Francis sounds like he's done really well, and I haven't done that yet. Zip it up, suck it up. You're in the rocket. You're strapped into the seat. Your time is coming. Take it from me. It's absolutely coming. You position like a king. PAAS, Pan American Silver Corp. We're talking silver. We've talked dollar. We've talked the gold-silver ratio. We've given you a small idea. And those on the gold-silver ratio, please don't misinterpret that as top calls or anything like that. You say, oh, so you're saying it's going to have a major pullback. This is too big. It is too big. It's too strong. It's technical. It's for those that are leverage trading when you shouldn't maybe jump in right near a localized high. You know, those sorts of things. That's what we're talking about. I want to make sure, has Pan American got multiple listings? It's got a TSX. Yeah, I think I'm going to stay with the American one over the Canadian listing. And here we go. Funny enough, I thought I had more history than that. So let's just close that. I thought it went back further than 96. And it turns out not. Okay, so let's give you this one. So great position hold. This is what we call the second impulse, by the way, from here through to there. And this entire stock's history is about to have its most exciting time. It's been in existence since 96. Some of you watching this chart are younger than this company. And, you know, it's had one or two good runs. The 2002 to 2008 wasn't a bad run. It didn't make a new high, a meaningful new high on 11. So it was a little bit of an underperformer. Miners generally were to the metal. So over here, I've now decided where my draw needs to go, and I will draw your target for you. Plains All-American Silver. 172. Same thing I've always said. You have no HVF forward, and you are in open price discovery. By the way, for those of you that think, why should we take this guy's interim target seriously? What voodoo nonsense is this? How does he know? We don't know anything, first of all. About the future, we don't know anything. What we have is a method that measures the geometry of each individual impulse and selects that like a hand on water. Think of this, a flat hand on water, and you jab down a little bit, just half an inch like this, and you create ripples. The displacement of the hand and the speed and shock of impulse dictates the height of the ripples, the concentric circles that ripple out. There is a natural geometry to the world, and the force that pushes down, that creates a high, that compensates for the displacement of the hand and the speed, that then generates the speed and the displacement size of the wave that is above the standard surface level. This is real psychological, for you to understand, geometric by nature. And the second interim is strong, and it replicates the pullback from the second impulse. And you are in ripper phase here, $28 to $69. That's it. You don't want to sell the stock. You might have a rest once you're running the 70, 69, 70s range. You might have a rest. That's not a sell point. I think we're in such a strong, your first interim, if you think, does this work? Let's just show you. When is the one? Since you triggered, that's the point you triggered there. You had a break and feign. Then you have a trigger to your midpoint pullback, feign back into the midpoint. The only red candle, where did it occur? First interim, one red candle, boom. You haven't had one till the next move here, which has been totally engulfed at your first interim. Boom, boom, boom. You're getting mainly green candles until you run this line. Then you might have one or two intermingled small reds, and then you're going 172. 172 on a $50 stock, guys. That's more than 3 times, and you shouldn't close. It's just going to rest a little longer. That's what I'm telling you right here. And you could have been in from 24. You could have been in from 24. Community members have known the draw on this. You could have been in from 24, but hey, it's only double. So 24, so you're going to make 3x on 50. You could have been making 7x from 24, 7, maybe 8. But you're still going to go beyond that anyway. So even those x's are going to be surpassed. $333. Man, oh man, guys, that's going to be good. You are in great places on all these equities. Great, great places indeed. Silver maples can be sold for spot. Absolutely. It's by the way, yeah. I mean, I bullied my partner into making XAUXAG purchase. The suggestion by her was there would be a pullback. I said no, you're getting it now, and I pushed her in. At the time, the premium, and she wanted Eagles because of its recognition and its proliferation and establishment, which were tiny but more expensive. We've already covered all the sales premium, all the things, and she's deep in the money just with the price today. Thank you for the extended review of CDE. I will sit tight with it as 33% of my holdings. Yeah, tiny bit bigger I would have wanted, Jim, for you. You mentioned 2 other very good ones there. But I don't think that's a bad decision, and I think it comes strong for you. And later, you'll get the benefit for the additional ounces out of any acquisition as price just goes doolally. And thank you again for your super price. Manu Moscolino is in the house. I like it. It sounds like we've got Italian heritage in the house. I like the names that finish in O, especially when they say Muscolino. Dear Francis and team, I missed your meetup in Frankfurt, but soon we will meet. Thanks for all the not only financially that I learned since 2018. Selling LTE puts and use dollars for long calls on CDE, etc. Yes, as I mentioned, we covered CDE, so you hopefully got a bit of value from that. I kind of prefer Hector a little bit more and 1 or 2 others. And I think AG, First Majestic, will have a catch-up phase because they accumulate. He just acquired, including problems. But those problems cease to be problems when price fixes everything. And then he's sitting on a lot of ounces. So the ones that were acquisitive might have later, harder runs when price is just ridiculous and everyone's like, wow, who's got the most? They play catch up. So you're going to get a later second surge out of those ones. So CDE and First Majestic might fall into that category. LTE puts, I'm not too sure what stock that is. So as we've already done CDE, we'll have a look at LTE and the bearish positioning you put on there. LTE, light access technologies I'm seeing for Canada. Let's just go stocks. Is there anything? Is that the one you're talking about? Tech, it sounds like a tech play. I'm not sure I've got a knowledge of it, and it's already been hit pretty hard. So I'm not sure that's the right stock. You can update us further if you want me to have a look at that. Good. Property Playground. Aussie's rates, how high, how long? Fixed rates now at 6% for X years. So my take on the 6x6x6, 6 nations, long end 6% is 100%. If you are in those nations, this is what I would do. Again, non-advisory for you. You can say, given the same circumstances, here's how Francis will play it. And this is what I would do. I would absolutely, even though fixes are more expensive. Why? Why are they, first of all, more expensive? Because the banks want to make more money for taking additional risk for you. And you want to say, that's a deal, because they are still underpricing the debt debasement narrative. Everyone is, which is why we're still able to buy silver at these prices, why the miners are not already at $1,000+ each. The market, people don't go from A to Z in understanding. Price over time gets them to suddenly realize the world's changed. And there's time. You go look at the internet take-up, it's slow. In fact, they built too many routers, too much undercabling, and it took a while before the take-up was there. Same with AI. How many of you are 100% utilizing AI every single day? Well, I use it for a YouTube headline and basic things and a spelling error. You know, you can do Google searches for that. A couple of more slightly smarter things, but the take-up, and I'm certainly not paying for it. So Aussie rates was the question, and this is the 10-year, which is the bridge between the super long end of 20s and 30, and this is the upside HVF. And can I say, for our Australian friends, this is a beautiful upside HVF. We call this beauty queen standard. And for a market like rates and bonds, it's very, very rare. If I was on a bond dealing desk and I had a certain amount of leverage allowed to my desk and I was dealing bonds, I would be aggressively short Australian bonds. But we've said this far longer than anybody else. Please understand, go look at our YouTubes. We are the news before the news. We're blowing our own trumpet there, and it sounds super arrogant, and it's not actually my avatar of arrogance. But because we're not a high profile analyst, people don't remember, lots of people here for the first time. We need to tell you that as this was turning, we were calling it here. We were calling it there. We saw this entire structure and said, you're doing a down leg. I saw this down leg and saw the hammer, and then it came again. I said, we are calling an RL3 here. We were in and around the 4%, 4.1%, saying this is a beautiful setup. For a bond market, which has quite a bit of volatility and news-based stuff, this is beautiful. You look at that squeezy, it had a primer within a primer and a final flush out to the downside. That is absolute textbook. You are going 5.75 on this, and HVFs lead to fast moving breakouts. That's why they're interesting for traders, because there's a cost of carry. So to Property Playground, thank you for your super chats. It is a difficult time for funding. Now that is, for this week, a little bit of a shooting star. So it might have got a little too interesting and done too much. What I would do if I was a homeowner or a landlord who had a lot of properties that was Airbnb, I would let this come back and I would absolutely lock in like gangbusters, anything below its current level. If you get 4.58, 4.6, I would be locking in. You get 0.1 off the current market, maybe 0.8, 0.75. I would lock in for as long as you can, but at least 10 years, unless you can pay off the property. If you can pay off the property in 10 years, you just need the income and you're going to be dedicated on it, do it. What's the property valuations outcome? If everyone is leveraged and lots of people get bankrupted and aren't taking the advice or the counsel that we're giving, it's not advice, let me say, aren't realizing the state of rates, they will become forced sellers and your capital price will be suppressed by auctions, bankruptcies, and void of sales. And it'll be such a dull, empty space. No one will be showing up. It'll be the uncoolest thing to be a property buyer, because it'll be like, oh, didn't that trend end, mate? What you still doing out there? Property's a bust. That's when you should be buying and putting in insane offers that banks can't afford to hold. Or BlackRock will be acquiring them as well, blood in the street. One of the two angles will be happening, and you might be able to get in, but they're going to make it harder for small-time landlords. They don't want you doing their job. They want to be the landlord. They want the scale. So overall, if you could lock in any profits and you're not underwater, I might consider reducing my portfolio to just the home I lived in, personally. If I couldn't and they were underwater, I would lock it in. And then I'd try to get long-term tenants, preferably a corporate let on a fair deal that will be with a small escalator for inflation. Don't forget that. because inflation is going to go the moon. That's how you can trick and catch corporate customers. Give them a great rental today, but say with an official inflation update. That's going to come and work you back in favor. Lock it in for 5-10 years with a corporation that have circular staff, with a global company where they have, Americans showing up to Sydney and the local Asian guys coming over, and they use it as a corporate let. That's the way to go with this. Lock your interest, lock a long-term corporate tenant with an escalator for inflation. That's how I would manage that situation. And I understand property. So hopefully Property Playground, you feel well served on that. Ed Jam, thank you for your Canadian dollar $13.99. We appreciate it. It's very kind. I'm holding a 10K ounce of silver maples and 80 gold maples, also sitting on a lot of cash. I'm weighing it in for a market crash to buy the miners. Your thoughts? So I wouldn't count on too big of a crash, Edjamin. I wouldn't count on too big of a crash for the miners. In fact, they're lagging already, and that is like a downward correction to the fundamentals. The more they aren't going up at the same rate that silver is going up, their valuation multiple is getting lower and lower, and they're becoming better and better value. So you actually, despite them going up and some of them being at near or all-time highs, they are devaluing relative to the product. And that is a function of disbelief that these prices are sustainable. They think it's just a structural derivative problem where there's a bit of a hump and a bunch of people have taken a lot of delivery in a once-off period. They're not seeing this as there's no more above ground availability, and people are realizing it, and the rate it comes out the ground isn't enough, and everybody doing solar is accounting for 40% of total mine supply right here, right now at current levels, and they're finding it at lower levels, and nobody's made any investment for future mines because the price has been too low. And you don't have enough dedicated miners that actually have real numbers on silver. The other guys are just finding it incidentally. They're not digging the hole for reasons of silver. They're digging it for copper. They're digging it for other things. We will turn into a more broader commodity bull. I'm not saying oil price will never at some point go up. I just think it's the worst of the commodities. You'll do better in coffee. You'll do better in a number of things. But why do you have to do better when you already got the best? Why do you have to do well in beans, in coffee beans? Why do you have to do well? Use your margin, use your investment to be in the monetary metal, which is the most sought after asset in a monetary-based collapse. You're the one selling lifeboats to people who are drowning. You can sell them cups of coffee. They may be cold too, but it's not quite as convenient a tool. They'll appreciate being warmed up for a few seconds, but some will actually appreciate saving their lives. So, it's useful, but it's not going to be the ultimate use case is value preservation. So we've done that super chat on that. Are there any people on super chats that we have not responded to? It appears we have responded to most people. Yeah, good. So that was the Aussie 10-year. This is one of the 6 for 6. Now, when I say 6 for 6, it's a title, it's a headline. The target is 5.75, so you might make 5.8 and then turn down. I don't consider us being wrong, and it might only make the 5.75 in March 2027, but throughout the 2026 year, it's done largely this: down, up, wind up, and then break, and then higher, and then the year's end. I don't consider us that being wrong. So we're just giving you a portfolio and saying they're all going to 6. It won't necessarily happen that every single one of them has bypassed 6. They'll be in the 5.75 going for 6 range. Maybe some of them will make it in 2027. This is debasement. This is debasement. The UK, my British friends, are there any British people in the house? We've got to do the UK 10-year. So this is turning into a bit of a debt update. By the way, why is it interesting if you're a silver stacker to hear about somebody talk to you about debt? Well, the clear value of this, let's go the longer term. We've done a lot of 10 years. The clear value in that is that the debt debasement is the gold fuel. It's the super juice for gold. 2 missing super chats. Share them. Which one did we do? Because I like the ones I answered.
The first one is would you keep holding XRP or buy silver now? And the second one is what do you think of still water mining?
Still water mining. I'm also seeing Smarty Jones, who I didn't name and thank for his super chat. Just enjoying the show. Thank you for what you do. Appreciate it. Still water mining. So let me finish what I was going to say on debt, because people want to hear the end of that, and some of the nations that are in real trouble with that. So we'll go to a weekly. I think our 40 years are favorite for the UK. Might be 40 or 20. I must check. The 20 it was. Currently coming down a little bit after some stress. So the UK had a high stress period. It's calming for a spell, but it's not going to be for long. So remember, we play the long game. So this is what's happened on the UK. Let's move that box out the way to the bottom right. That's our draw tool, by the way, that you too will get after completing your program and test quiz, HVF method. You'll be able to use it every time on TradingView 2 to give you risk rewards, entry points, all sorts of useful information that can be customized. Also the degree of value of each of these points. These colors will mean something to you by the end of the program. That was the feign and break, stage 1. That is the meat of the first interim target and pullback, and you've been in lengthy gestation since. This is called a stall box, and you're sitting in a stall box in and around the first interim that is there, a very faint line. At some point, you may even revisit the funnel one more time, but at some point you will break and you'll go to the 6.2. And the end outcome, by the way, you can see a time stop here. That's the vertical purple line that's there. You will see that there's a time stop for that, for it to have performed on time. Just because you draw a target doesn't mean it performs on time, but the time stop for that is 30th of November, 2026. So things could get disorderly. You start and you can sometimes be slow, and then you're going to go quick. And I think a lot of nations' debts are going to run at a similar time. You're going to see bonds as an asset class be disrespected immensely. They're going to get the disrespect they deserve for the excessive proliferation of fiat and the debasement therein. Thank you, by the way. We were looking at you, and there's 1.9 thousand of you on 1900. Delighted to have you all, by the way. Don't be the 100,000th guy. We're going to come and find you and send you to Lagos for a week's holiday. And everyone who subscribes after that, going for 2 weeks, and we're going to send a minder there to make sure you're there. So don't do it. You may as well do it now, quick, before we're at 100,000. Otherwise, it's, whoa, you know, that kind of a holiday. It could put hairs on your chest, or you could come back with a nervous twitch. I don't know which. But anyway, so that's the debt markets. Slow at the first on this front. Aussie perked up to catch up with the others after being relatively lower. Beautiful pattern. So it's happening. That debasement in debt and fiat is more money that is exiting the digital phony and proliferation world and looking for something physical. And what will they all be told? Gold, silver, and platinum, in that order. Gold, silver, and platinum, in that order. So remind me again, what was the request? There was a crypto request. I don't like doing too much on crypto on the Market Sniper channel. So what I would do is, here's what I would say to our XRP friend, because he invested in a super chat and I want to respect him. First of all, XRP is not looking great. We are in what we consider to be a little bit of a break here.
Name is Mark Trust in Jesus.
Mark Trust in Jesus. Yeah, good fundamentals. Let's just say that, and welcome and thank you. So that's an inverted structure that did break. It did, however, meet the $2 mark on XRP, which we've drawn in here a long, long time. And that's a structural kind of, typically it's bought. I'll show you on the bigger time frame as well on that. So you've had a little bounce back, and it's a typical place where you might return move. But I don't like this. This points to downside on XRP. Okay, so here's how I run my world in terms of funds. And I'm a fortunate guy, thanks to you and many of others of you and my community and my HVF method and trading. I'm lucky enough to have money in all the markets in different amounts. And I have them ring fenced and they left there. Sometimes the crypto, if it's not looking attractive, it can just be in stable coin or gold backed stable coin. Remember, I mentioned that as gold ounces is preservation of your wealth. So I have things in crypto, and I'm talking much less about it because it's much less interesting. So I focus where the best rewards are always going to be given. So we move the spotlight around. I am not committed to a given market. I go where the weather's good. Much how I live, by the way. I go where I'm treated well and the weather's good. And being treated well in markets is where there's upside HVFs and strong moves in my favor. Crypto, not looking so strong right now because of Bitcoin, because of a lot of things going on, and retail is very wrecked. What do I prefer to XRP right now? My crypto money stays in crypto. So it'll either go into Pax Gold or a better gold substitute or be in stable coin if I'm not happy with where crypto's at. I'm not particularly happy with XRP short term now. I still stand by, because many people said, you said $19. Yeah, we still say it. You've got a huge amount of time frame for that. That's a massive setup. We are in that typical correctional level. Can I point out that we were getting in at 60, 49, and 50, and we called the localized high of $3.36 for XRP. That's only been surpassed once, and most of the time you've been well below. And you can see here you're bouncing around 2 at that point. So closing at $3.36 inside a massive pattern structure for crypto, not massive like silver, but it's big. You will have pullbacks all the way along on your journey, and it's not an interesting time. I do prefer, so my crypto allocation of funds stays there, and if I hate everything, in terms of how it looks, it goes into gold stablecoin or tether stable coins. But at the moment, what I do like is XMR USD, which is far better, and I'm currently a holder and is running. And there's a number of reasons. So you're getting some real alpha here, because I wanted to share this on the crypto channel in a few days' time. So sorry to the gold and silver guys who aren't interested, but you may find the process interesting. You could learn something. This, at this 4-hour time frame, is looking like it is in one of our structural settings. And I traded like a noob, by the way. I was holding in here at a macro level. I'm bull. So I'm showing you first at the low level. I should actually show you macro to micro. But because we landed on 4 hours, I'm covering it. This looks like we're going to go into a bit of price discovery mode. The criminals want to hide their money and they'll chase up XMR. The non-criminals that recognize what the criminals are doing and want to surveillance them might run into XMR. I see it as a far more legitimate privacy potential token than Zcash. Go look at the founder, the transgender and everything he promotes and the Israeli connections in Zcash. Not interested in that fundamentally and also technically at the moment. XMR, definitely in the crypto. It's my one shining light space at the moment. That doesn't mean we're denouncing the big long-term potential on XRP. It's not clear that's going to be this cycle. We never gave a timeline for it. It's going to come later. We move where the ones that we expect. We have a lot of things we expect to happen, and we don't know time frames. The ones that are moving and showing the attributes. This is setting up a wind-up. It could even already have broken if we haven't had. We might not get a full third down leg on this. It could already be in an impulsive state. I am in XMR. Crypto's working for me, apart from I pulled a real newbie trick and I got out on this down leg here and ended up buying it back there. So, you know, I wasn't sure. I thought it could pull back all the way down here. It gave a nice double bottom in the end. So I still make mistakes. Any notion that, you know, in crypto, I'd say I've made more mistakes this cycle. Silver's just been too kind. It's been hard for me to get wrong. W bottom here, there. And on small time frames, I still made even mistakes on silver, but it hasn't mattered. We've just been leveraged long something that's ripping, you know, so we get it, you know, you can't help but make money. That's at a pullback after that W bottom. That might be all you get. Now, I want to show you why this 4 hour is significant, because it could be a trigger for a far larger setup. We are very bullish on the monthly, and you will see why with a simple look. So in terms of crypto, that is why we are in this token. And it looks like it's getting ready to move sooner. Now, it's not giving you the draw because that localized high is a bit high. I know the number, it's 51760. So I have to just remove it for you. Remember, we also draw setups in crypto and other assets in gold ounces. Remember what I said to you. It's not just talk. I'm not verbalizing something just for the fun of it. I'm telling you how you should measure assets and do charting in gold and silver ounces. So that is the draw. I'll just hide some of the excess stuff and get this in here. We haven't got the full. It's going to be tough. I'm going to squeeze that in there. I have to go one. I've gone a big time frame monthly. I normally have to do this 2 weekly, but we'll just go 2 inflection points, 1 bar. There you go. So that is where we see XMR. So by the way, that's an unbelievable move in percentage terms. So for those of you that aren't in crypto and you have a little bit that you want in other spaces, this in percentage terms is an unbelievable move, even at this current level. Don't forget you're in an upside HVF on a 4-hour. And I'm now telling you that actually you're in a macro monthly HVF that's busy having a winding up. And I want to talk on that point, by the way. I've got something I need to show you on that very point. A primer, a squeeze within a squeeze. That is how you truly multiply yourself to wealth. That represents an 840.34% increase, which, by the way, is, and again, first structure. I would not close the 100% of the position. And we have a method how we manage after the target. You can learn that when you click the link and book a call so that you can maximize your wealth. If you get caught on the wrong side of this polarization of wealth, friends, you'll be UBI serfdom. It ain't universal. It won't even cover basics. It's not income. It's a subsidy. It's a subsidy. It's a welfare subsidy for people that have failed. You want to remember. You want to remember that that ain't a good place to be. You've got to maximize wealth. I have crypto, and that is where it is. And that is the reason why. That's your macro draw. Now go and divide XMR, and you can do this chart for yourself, by gold ounces. You want things that are going to overperform against gold. Silver is one of them. And the question the XRP man asked is, should I buy silver instead of my XRP? Now, what you should ideally do is have a capital, and I respect that people don't have bottomless saving pots. As I say, I'm a lucky man, and I owe a lot of it to all of you on the channel and many other reasons, and to my team and a lot of other things. But ideally, you have a capital allocation for traditional markets for which you are predominantly aggressive in miners, silver. Those are your outperformers even to gold. And you also have a capital allocation to crypto, which you leave in there, that is either tied to gold when things are terrible, to preserve your buying power, so you do no worse than a gold performance, which is going to be very good. And then you capture things like Monero, as we've just given you on this. Now, I'm trying to get it to draw, and I just need to change it back. It's not a quick IP, it's the normal one. That is your potential move of Monero against gold ounces. And if you don't think these numbers will mean nothing to you, remember it's about percentage of overperformance of one asset class against another. And the benchmark is gold. That's your new wealth. If you want to know your wealth, don't tell me dollars. If you're speaking to me, and I won't ask you that question, I'm not indiscreet. But if you ever were to, gold ounces is what will mean the most to me. And that's what you should do for yourself in terms of how you benchmark. So if we go from here to there, you're talking about in gold ounces in due course, 1937%. Now that's why I still have capital in crypto. That's why I haven't taken it out. It's been an ugly affair, this bull market. Outside of Bitcoin and maybe Sol in the early part, it's not been an exciting time. That's why I have funds still in that space for that return in gold ounces. in gold ounces. So its current value is not even 13% of a gold ounce. It could be twice a gold ounce, 201%, and overperformance to that. I want some of that. It's the alpha to gold that matters. Okay, so I've given a lot of time to that. I think you should feel well served. It is not a traditional market concept. We are talking about this more on the Crypto Sniper, and I will be updating on that. You should subscribe there as well. I shouldn't say should. That sounds very like I'm bullying you. If you so wish, that is remaining available to you. So look at some of the chats and we will wrap soon. 1,743 of you. Thank you for all the super chats. I want to say something as well to you, just sincerely and no trying to be funny and all of that. Thank you very much for getting us to the doorstep of 100,000. We truly appreciate it and we thank you all for that. For participating, for your comments, for sharing. It's massive. We don't take you for granted. We want to entertain you. And it's always been my objective, even for people here that have not imparted on any money, to thank and add value. Leave someone better off for their interaction with you than they were before. And I think the guidance, not advice, the guidance that we are giving is doing that. If that's true, you tell us. If it's not true, tell us. We want to be better. Keep it courteous. We read all your comments and we direct. I did say one other thing that I would cover and I haven't covered that I think I should, because I hate saying things I will cover and then not doing them. We hold ourselves to a high account for delivery of everything we say. My word is my bond. I like old-fashioned values. I like people who have that. I like people I can do business with on a handshake, where integrity means something. In all our community dealings, we hold that standard, including the brokers we affiliate with. They must perform and do what they say they do. I use all the links that are in my bio as use. That's Pure Gold, Bullionvault, every single one, SimpleFX, every single one of those broker accounts are at all-time highs. Scandinavian Capital Markets, they have done everything they should do. I am making the money. We have to have brokers, friends. They're not just necessarily evil. They've done what they should do. They're making me money. Tickmill, they're making me money. SimpleFX, they're making me great money. BTCC is in there. We are doing well there as well. Watch, we're grateful to all them, the affiliation. I want to cover the oil. We've had Katuso Research say something, and I should finish on this, because you're going to be tempted out. Actually, my biggest job now is, if you're already in silver, is ensuring you remain there. Now, again, non-advisory, but ensuring you don't leave it in the traditional markets. As I've said, in crypto, you know where my bias is and my favorite token and the next one to run right now is. But if you're in traditional markets, silver, and then to follow platinum, which will catch up and overperform, and also those miners. What I want to highlight is a lot of people are saying silver's value relative to oil is at an extreme high on the range, and that in actual fact, you should be pivoting out of silver into oil. This is an argument that's being put forward, and that it's abnormal, it's never different this time, all things will correct. Now, the one problem we have is that, of course, it's already shown not to hold in a mega spike in the destruction of oil. I will share screen so that you can all see that. We've already had one super spike that showed, in actual fact, you weren't range bound so well. I've got US oil as a proxy for WTI. There are people that have this even further back. Let's just get this a longer history for the silver. It likes to keep putting it back in. It stopped sharing. I didn't do entire screen, so let's do entire screen. So this is something important because many of you are asking. So as I've already said, we read your comments. Entire screen, share. We read your comments, and a lot of people are asking, and they've got, so for example, Rick Rule is talking a lot about oil and gas is the most hated. Gas is doing great, and gas could probably outperform oil as well. I think oil is one of the last. There is a commodity with the fiat and debt debasement. There will be a general commodity bull run too. The first movers are your best and your biggest movers. This is counterintuitive. You think you missed the first train, you'll jump on the second train. Now, those in London will know this story. The first train is the fast one, Edinburgh to London. The second one you jump on stops at every town all along the way. So you catch it second, and it takes 3 times as long and never gets up to the same speed because it's stopping at every little town all the way along. I'm here to tell you, you're on the silver bullet train. There's a reason why I named it a train, and it is a train. You're on the silver bullet train. That's the facts of how things are. You're on the silver bullet train. Don't get shaken out. Now, those that talk about the range, and as I've mentioned, KuCoin Research, I will say they wrote the book Oil, the Commodity, so they are inherently oil biased, I think. You could argue I'm inherently silver biased right now by the way I talk. So you must try to determine between there. But if I tops and tail that, you're generally between 0.15. I could push it to 0.2 maybe. Maybe we do 0.2, for example, and 0.7. So we have 0.7. Let's try to get those numbers more accurate. I'll do it on here. We'll do it really accurately. I would say we call topsing and tailing. You will learn about this in HVF method in our very well recorded videos that we've taken real pride in doing well. It's one of the things most people that join the community are a bit shocked by is when they start watching the content, they go, damn, there's real PowerPoints, there's annotations, there's amazing audio. These people really care. And I'm proud of that fact. I'm really proud of that fact. And you will learn the skill and you'll watch it being implemented. And it's one of the first things that people notice when they come on board. Plus your tests to help you, monkey puzzle, easy to answer, to ensure that you're getting there and understanding along the way. So if we're looking since 1970, and in fact, before, we've got 64 on here, the chart gets a bit sketchy, probably because of the fixed pricing of silver much before then. There wasn't such a free market. It's not actually such a range. In fact, for me, this is a watermelon smile, illustrating financial repression. There was a spike in 78, 80, of course, but it appears once off. And there was another spike with COVID that appears once off. So for those that are calling it a range, very horizontal, I think that's narrow-minded. I don't think it's correct. You're in a watermelon smile. You're in a bucket. You are bottoming. You've had financial repression on silver since the Hunt Brothers event there. And the lows have got, the highs have got lower, lower and lower, and the lows got lower and lower until here, against oil, your ultimate low, don't forget precious metals low was 2000, but against oil, your ultimate low was 2006. Silver was deeply unloved and oil hopelessly overappreciated in 2006. It hit, by the way, nearly $150 on the WTI contract way back. It hit in just prior to the subprime collapse. You were also rich. You were freeing up money on your house going up every month. You were remortgaging, buying cars, going on holidays, expending, buying online. Amazon was new and fresh, blah, 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 blah. Delivery at home, such excitement. You're getting parcels dropped off. We were all spending like drunks. And so was your government, by the way, which is why you are where you are. That is the base in this relationship between silver and oil. Since then, you have made, and I'll change color here for my watermelon smile, higher highs and higher lows. You can see these lows, higher highs. Then you got the super spike of CV19. Many will say anomaly, and it was. So I won't count that high, but the candle bodies were already higher. That low afterwards, when oil super spiked back up again, still didn't go much lower than this low. And since then, you've been winding up. This is the most sustained candle. You've had 2 red candles there, there and there. Since this entire period, okay, wrong. Let's count that one in there. Let's go right back to this low. From this low in 2022, so we made the high on precious metals, late period of 2021. From then, you've only had 3 quarterly periods, a quarter of a year where you traded down. There they are. And they were a while ago. There, there, and there. You have traded consistently ever more up, up, and up. Silver has been suppressed, friends, to such a degree that no one understands the price it's going to. It has been suppressed because there was a lot of storage above ground at one point that has been whittled away. We have played a financial precious metals repression game using silver to keep gold even down. And even still, the bungee cord between gold and silver stretched at one point to 126 ounces, 128 ounces to silver. That has now changed. The bungee cord is snapping back. All previous relationships with silver are going to get redefined. Let me say that again. I'm saying a key point that all these guys that are doing relative silver analysis are going to get wrong. All key ratio analysis with silver are about to get redefined. All. Don't look at the history and think that's your number. I'm showing you a watermelon smile that runs longer than some of our lives here. In fact, if I go to 64, I wasn't born. You're looking at a watermelon smile of suppression that had a minor spike on Hunt Brothers. They said, never let this happen again. They've suppressed, and you've got lower and lower highs, lower lows. That ended after 2000 with a final low in 2006. Since then, you've been largely making higher highs and higher lows, but for the reaction spike after COVID that tested this low as well. Since that CV19 event, as we said, debt turned. This is another key point. This is when the debt market turned. No longer an asset. No longer an asset, guys. 1,700 of you watching this, hear me now, look into these eyes. These are my seeing eyes for close quarters to read your chats. Look into the eyes, nothing between us. The debt market turned. This is the seminal event for your precious metals, excessive overperformance that too many people will be getting out too soon, getting into oil stocks and other commodity inflation-based trades when this is very specifically a monetary-based crisis based on a fiat and debt bubble. Hear that and understand that. If you can understand that sentence, that's the most valuable thing I've done today. If you can understand, because the action that goes with that is you totally do not pivot out of your silver to buy oil barrels or pivot out of your silver stocks because I got a good run to buy an oil stock. And I know Rick Wu is generally right, and I know long run energies will go up because this is going to turn into a broad commodity. But the sweet spot is the first spot. Everybody thinks they're going to get multiple extra rides by jumping into the later ones into the queue. You're going to miss on the best part of the Giselle Bundchen marriage part. That's what's going to happen. You stay on the quick chain, the silver bullet train. That is going straight from London to Edinburgh. You're not stopping at Littlehampton on the way and never getting beyond 20 miles an hour and loping along and watching time go by as others whiz past you and you being wasted time, lost wealth building. They will go up, but not in gold ounces, some of them even. And I showed you this before anyone else spoke about it in gold. And I'm still fighting this narrative. We stood up before anyone was talking about oil and said, gold is going to outperform oil. You go short oil, long gold. And we showed you that chart and it's killed it. It's made its target, had a small pullback at the target and is continuing. We said it's a cyclical reversal. And we highlighted that in CV19, it went to infinity with a naught check. You could, in fact, get very low oil on a depression. You are going to have a combination of depression for consumer and retail, jobs being cut, low wage increases, very tough environment, and a massive runaway in the cost of living. That so many people are going to be swept into welfare that government cannot afford. An extreme version of stagflation that we gave you the name, hyper-stagflation. We've given you the definition with the button that we've shared on X many, many times. Hyper-stagflation, massive amounts of stagnation, recessional, depressional, massive amounts. I need to check when last we had that up. And I want to come back to this other post because I had other things, one last item to share with you. Please get this right. This is not a chart of oil winning. This is not a chart of oil winning. This is you married Giselle and you're looking at other girls and you're an idiot. You stay right there. The bed's warmest right there. You've got everything you want in your lady. And by that, I mean investment. And by the way, for my lovely lady supporters, I would like you to institute a man of your picking. You marry Brad Pitt or whomever you want. Please put it in. We love you all and appreciate you extra for putting up with my cheeky humor. And I thank you all, especially as well. So we give a unique Merry Christmas for the ladies. Okay, so the final thing I'm going to show you, because we've been streaming for a while, but I hope it's been entertaining and valuable. I was illustrating on Monero when I was talking, and we weren't supposed to go into Monero. We had a super chat. We honor everybody. And we showed that there's a squeeze on the 4 hour. There's a squeeze on the 4 hour. At the same time, there's a much bigger setup on the monthly. These are real gifts. I just want to highlight something to you that was really, really seminal. And it's a little bit of poke fun. I'm not trying to be mean or arrogant. He's a good guy, by the way. He has innovative thoughts, and I'm not beating up on him. But there was a certain person that tweeted about silver on its 5th pilgrimage where it goes above $25 and everybody's going to lose their mind. Silver makes its 5th annual pilgrimage. Let's make sure I'm sharing screen. Yes, I am. And, you know, and everyone's going to lose their mind. And yes, I was losing my mind. It was coming. That was on that time frame. He had 5 years of history in there. 5 years of history. I'm not sure whether it's a 3-day chart. It included back to 2019 to 2024. He literally called the primer inside the largest HVF. He called a 5-year primer. Now, primers are a squeeze within a squeeze. These are typically small. We get excited about a 1 hour primer inside a 4 hourly and a daily for a move. He called a 5-year duration setup primer inside of my entire lifespan macro and chose to rage bait silver people at the key moment that this was happening. It's quite fun and entertaining. And I mean, we can all get everything wrong. So by the way, I've been pig ass wrong too. So it's not about being wrong or right, but it's a bit of fun. This was that squeeze. That squeeze right there from that tweet was in there, was right in there, that chart. And I can tell you that we were breaking 25.9 was our triggering event of the primer for a 333 target. That's how long we've been aggressive silver. And it started slow at first and then suddenly very fast. You're going to hear a lot of that. Slow at first and suddenly very fast. That's what fast-moving breakups a la HVF method, uniquely designed by us for you to multiply your wealth in reset times and to buy yourself further freedom away from attack vectors such as scavenge mode governments in a hyper-stagflationary world. All our phrases, all our understanding of where you are right now. We called that right then as that tweet came out. That tweet literally came at $26 in April, the 3rd of April, 2024. He was literally calling the primer break of that third high. He was literally calling the primer break of that third high, and that's why I drew it. And that was us losing our minds. And it has since then gone on to be exactly what we've said it would be. Let's get that back up. Sorry, over here. You can see it over there. An absolute ripper that is now at 60. That primer broke at 25.9. He said that at $26.2. We went on and triggered the main pattern at 30. Can I also tell you, most other analysts that were bullish silver were sitting on cup and handle narratives. And things for being early were going to occur at $50. You could choose to buy before, but you could, $50 was the break. That is how the framing goes. This is why we say news before the news, get in early, stop loss tight. The stop loss on that primer trade was entry 25, stop loss 21.9, $22. You had a $3 difference on that. That's caused the squeeze. $3. $3 is a rounding error that has seen me move the target from a 330.83 to 333 just for fun, because it's half of 666, and we're living in that kind of a world run by that kind of a people. For my amusement, I added $3. That's how big the stop loss on that primer is. Watch and listen to me now, because I'm dropping real bombs here near the tail end of this stream. This is super important. The dollar maximalists are wrong. They're so wrong, and they're not doing you a favor. The dollar and debt maximalists, there's people that talk about shortages of treasuries and all sorts of monkey business. The only trade is the physical monetary assets. My goal, in my mind, to best serve my people, of which you are part thereof, is to keep you in the best trade of your lifetime and not let you fade too soon and leave money on the table. For that reason, and people who do real charting, like I do, had exactly the opposite view as this person when he posted that. The most significant event to the bullish side was occurring as he was pushing that out on his 5th pilgrimage event to the $25. This squeeze within the biggest absolute mofo of squeezes was just happening. The primer was so big that our call, we have just broken. We have the YouTube where I show you, we have just broken this HVF. No one of the cup and handle guys were ready to call the break yet. They were waiting at $49 and $50. You got long $25.9. You should have been investing before. Many out of faith and fundamentals of you were doing it. I'm telling you, technically, this is when the game started. This is when it all started to go down. That is going on my wall in a picture and a frame in due course when we run $333. Because it's the folly. It's a reminder for me about arrogance. It's a reminder of people that understand charts and do charting and people that don't. I wouldn't even on this chart have gone in hard against silver unless maybe I was paid to be doing so. I'm not saying that's the case, but I would never on a structure like that have gone anti that thing. You could tell me that's natural gas. You could tell me it's Apple. I would tell you it looks like it's going to probably go up. That is technical understanding. That is what you will get when you click that link and you come on board. You will start to develop a mentality and an understanding for how markets move. That doesn't mean you'll immediately print all money, but you will get more lucky. The reason why you're hitting the link and booking a call during the course of the next week, the quiet days in between shopping, the shoplifting days to Christmas, as I like to say, you will get growth on your wealth well beyond what you might for understanding how markets move. And never would you tweet that on your own profile on a chart like that. You will be too busy getting leverage long with carefully managed losses to ensure in case you could be wrong, because these are all lessons about how smart people get to be wrong. And we've been part of that, just like this guy. So I'm not legging anybody over here. We all get to be wrong. How much does it cost you when you're wrong? Thanks to money management. And how much do you make when you're right? You can actually afford to be wrong far more times than we have been and still be incredibly wealthy, because we are overexposed and overly dominantly in the best trade. When you are in the best trade, in the best markets, you're doing it. So this chart here of oil does not point to me that you should be rushing out of the monetary metals for oil. And I'm sorry, you're in a watermelon smile of debasement and then recovery. You don't get out because you're about to have price discovery on one of the biggest manipulations. So I'm not sure if there were any more super chats, but we've been talking for a long time. We're going to wind down. Thank you for coming on. If you want to ask questions like Dash and all of that, the Crypto Sniper will do a live stream between now, not this week likely, but probably next week. And we'll talk further on all things crypto, and we will be updating you. Thank you for the followers. Have a Merry Christmas from the Market Sniper, the full team that support me, that allow me to do this. Thank you to all of them. I'm not going to name them, but they must be thanked. And our amazing community member, our top guns that help with the webinars, and everybody. We're running an awesome thing. We've got some exciting plans, by the way, for community members to come together with us on holidays, meet in person in non-Western nations where we can talk about the markets together. We can do fun things on holiday. Maybe you would like a holiday, a packaged holiday with friends and community members that you are part of somewhere nice when you take your next leave. To my Americans, I suggest you do it. To my Canadians, I suggest you do it. To my Australians, New Zealanders, UK, and Western Europeans, I suggest you do that. To any Japanese and South Korean that are tied into the Western hegemony as slave nations, I suggest you contemplate looking at lands afar. I want you to survive this. I want you to thrive in it. Thank you. Merry Christmas, and we'll probably talk to you before the new year. Bye for now. Wanting me to do, Alex? Okay. Cheers, guys.